Let's bring in Sucharita Kodali, Forrester Research Retail Analyst. Sucharita, what's your take initially on this? Because the stock is up sharply, even though they took down their full-year guidance.
Yeah, I'm more concerned about the top line revenue numbers and the digital numbers, because those are numbers that typically we'd expect to see much higher. They don't seem to be in line even with Walmart. So it is a little bit puzzling what's happening. I do think that inflation is part of the story. That's exactly what the CEO had referenced. The categories that seem to be most affected are electronics, as well as some of, hard goods, which is that electronics category, apparel, and then other non-consumable items as well in the home sector. And home naturally is down overall, and any accessories that would benefit the category otherwise are going to be soft. And that certainly seems to be what's playing out. Target's heavily weighted in those categories, less so than Walmart, more so I say than Walmart. So that seems to be problematic.
And that accounts in part for the difference in performance in Walmart and Target. But does that account fully? I mean, is there a valid trade-off in terms of valuation, with Target trading at about 16 times forward and Walmart trading much higher than that? Is it worth the premium for Walmart, given the mix, given that it's, not beleaguered by these pride boycotts?
Right. And the whole concept of, kind of the depression in its numbers due to some of these culture war issues seems a little exaggerated to me. We've seen these things play out before with companies like Nike and others. They're not really they don't have a long-term impact. They don't really have a deep impact in general when we've observed them in the past. So I feel like it's a little bit of pointing the finger at that, when in fact it's probably not that big of a material impact. The bigger question is more about Target's strategy. I mean, Walmart certainly is, of course, more diversified globally. I mean, they even have business in China, which is actually growing. So there are things that are different about Walmart's business. They also are more focused on technology. They have a much stronger ad business. I mean, their ad business is in fact larger than companies like Snapchat now. So there are things that are different. Target's certainly trying to grow that part of their business, but it seems like there are big differences that they have not been able to capture since the end of the pandemic. Essentially, they've lost all of the gains that they gained during the pandemic as far as the valuation of the company is. And I think that a lot of it just has to do with product assortment and their inability to charge premiums, and for consumers to choose to purchase in other categories and with other retailers.
Sucharita, obviously we're going to hear from Walmart tomorrow, so we'll get more details. But, to your point, and it's the point that I often make, Walmart obviously over-indexes in grocery and food and consumables. 56% of their sales is there. It's a repeat business. They've told us that they have a higher income shopper that is starting to go there. Does it also speak to perhaps more of the consumer pressures that are being masked in other areas? Meaning Walmart obviously seems to be an outperformer when times are tough economically. Is it maybe more exaggerated than we're giving credit when we're seeing such a divergence between Walmart and Target? It feels like it has to be more than just food.
Yeah, it is puzzling, because all of the economic indicators about consumer spend are otherwise pretty strong, right? The shopper still seems to be spending. All of our aggregate retail data is that the shopper is still spending more. Why is Target not seemingly capturing more of that, especially as the affluent consumer is doing well? And my hunch is, in looking at the data that we see, is that affluent consumer is actually just spending right now in other categories. They tend to be spending more on services. They're traveling more. It is the summer. So they're on vacation. They're spending it in Europe. And that's not where Target has any, leverage right now. So that seems to be potentially a factor here. Does that mean that they should catch up later on in the fall or Christmas time? Mm-hmm. They may be sandbagging a little bit with respect to, kind of really decreasing those expectations. The comp store numbers being as down as much as they were is really surprising.